Hey everyone, it's Jared and Matt from Perspective Wealth Planning, bringing you your weekly market recap from the week ending Friday, April 13th.
We're going to be covering what happened in the markets last week, along with some key news events, and also we'll be wrapping up with our thoughts going forward. Jared is going to go over now what happened in the markets last week.
Last week, we saw a nice bounce in almost all of the major indices. The Dow Jones, which consists of 30 the largest companies in the United States, was up 1.8% for the week, but still down almost 1% for the year. The NASDAQ, which mainly technology-based companies, up 2.77% for the week, and that's the major indice leader, up still over 3% for the year. Foreign stocks and emerging markets up 1.5 and 0.7 respectively for the week, and year-to-date both positive, up 0.6 and up 1.5% year-to-date. And lastly, the S&P 500, which tracks 500 of the largest companies in the United States, up 2%, and year-to-date right around even at negative 0.1% for the year. The chart that we have in front of us today is of the S&P 500 from the beginning of this year through where we currently are today. There's a big green box around the chart, and that's the range that we've been trading in over the past couple of months. Right in the middle of that box, there's a dotted blue line, and that's the midpoint of the box, which is also currently where we're at right now with the S&P 500. If we cross above this line, we could conceivably see a bounce back up to 2790 at the top of the range, and in the process, we'll cross over the 50-day moving average, which is the thin blue line, and that could potentially be a bullish signal for the market. So what happens if we don't cross over that blue dotted line? We could potentially see a drop back down to the bottom of the range around 2590 if this doesn't happen, and in the process cross under the 200-day moving average, which is the thin red line. That's what we're looking at on the chart for this week, so I'm going to pass it over to Matt to talk about the news from last week.
So last week, China responded to Trump's demands on an extra $100 billion worth of tariffs on Chinese imports by saying that they are actually going to decrease tariffs on auto imports. So they backed down and the trade war has been avoided for now. But that's almost an afterthought with what's going on in Syria. Last weekend, President Trump tweeted that we should have extra economic sanctions on Russia, which in turn caused the Russian markets to sell off on Monday. Midweek, President Trump then tweeted, "Good luck to Russia and Syria shooting down all of the missiles that will be flying their way." And then Friday, he announced that there will be precision airstrikes on chemical plants inside of Syria. And over the weekend, those airstrikes occurred. We didn't know what was going to happen with the markets, but it seems like they've shrugged that news off. News outside of President Trump, Mark Zuckerberg came to Capitol Hill last week to discuss the data sharing of his users on Facebook. And this is important because a lot of companies are collecting data on their clients and customers, and they're either using that to go and market against them and advertise, or they're selling it to other companies to generate extra revenue. So we will see what happens from that testimony and if Capitol Hill will actually pass a bill regulating this type of data sharing and data collecting, but I'm not going to hold my breath on that. So that was everything from the news last week. This week what we're going to be really focused on is 10% of the S&P 500 companies report their last quarter's earnings.
These earnings reports could have a big impact on which direction the S&P 500 decides to take moving forward.
Thanks for watching, and at Weekly we strive to give you everything you need to know about the markets in 5 minutes or less.
If you like the information we went over today, go ahead and like our Facebook page and share our video. Thanks for tuning in. We'll talk to you guys next week.